Good afternoon. I'm Walt Bauer, and I'd like to welcome you to the Human Development Institute's second spring seminar. We welcome the participants who are joining us online through Zoom, as well as the participants who are here with us at the live presentation at the University of Kentucky. Our presenters will provide an opportunity for questions this afternoon. We welcome questions from all of our participants. Please type your questions in the chat box if you are online. Should you have any questions about continuing education credit, please contact me. Please take a moment at the conclusion of the seminar to complete our brief evaluation. The evaluation will be sent to your email address immediately after the seminar. It's really helpful as we plan for upcoming seminars. I'd like to take a brief moment to announce our next HDI Spring Seminar on April 7th at 1 p.m. and it is titled Serving Those Who Served Us, Understanding Military Culture and Disability Awareness in College. Registration is currently open at the Human Development Institute's website. Please join us in person or online for that seminar on April 7th. Now, to introduce today's speakers. Carolyn Wheeler has over 30 years of experience working with families and persons with disabilities. Since 1999, she has worked as a project director with the Human Development Institute, where she trained numerous individuals in their personal futures planning process. Dave Mathis has over 35 years of experience working with families and persons with disabilities. Since 2004, he has been the Program Planning and Development Branch Manager for the Kentucky Office of Vocational Rehabilitation. The title of today's seminar is Able Accounts and Other Financial Planning Tools, The Importance of Developing a Financial Identity. Now I'm going to turn it over to our presenters.
I guess that would be me. All right. Thanks for having me, Walt. I've titled my part of the presentation, The Importance of Developing a Financial Identity. Some of that's in here, but mostly I talk about stuff I know, so we'll go with that title. In case this might be news to some folks, but asset development has been an increasing part of federal policy, anti-poverty strategy in the last few years. It involves assisting low-income individuals to build assets as a means of developing economic mobility and security. It's based on the belief that families who develop financial assets will be more stable and better able to plan for the future. So a few of these early slides are kind of wordy, but we'll get through them.
Thank you.
This is a term for asset development, which I kind of use interchangeably with financial empowerment. But the term asset development, this is from the Assets for Independence Individual Development Account definition, a federal program that we'll talk about in a little bit. The term asset development means a strategy to assist low-income workers and job seekers, including individuals with disabilities, to move towards financial self-sufficiency through income preservation, effective money and credit management, the pursuit of post-secondary education, the purchase of a home, business startup, and setting aside resources for the longer term. And this is some of the things we're going to talk about in the course of my presentation today that compose asset development: financial education, and building a relationship with a financial institution, credit rebuilding, individual development accounts. Does anybody know what those are? IDAs? I do. Carolyn knows. So we'll give you some information about those. Low interest loan programs, free tax assistance in the Earned Income Tax Credit, EITC. Does anybody know what EITC is? All right. Well, there's some more information for you. And of course, benefits planning, which Carolyn knows a lot more about than I do, and you'll probably cover later.
No, actually, not today.
I'll cover it a little bit. I'll cover it a little bit. So why do individuals with disabilities need a financial identity? Some of these are fairly old stats, but I think they still hold true today. 54% of individuals with disabilities earn less than $20,000 compared to earn less than $20,000. That compares to the overall population of 35%. 22% of individuals with disabilities earn more than $40,000, and that compares to 42% of individuals without disabilities. In the 2010 census, and there is more current information than this, the poverty rate among individuals with disabilities 18 to 64 living in the community was 27.3%. The poverty rate overall for individuals without disabilities was 12.8%. That is a poverty gap of 14.5%. In Kentucky, both those numbers are higher, and the poverty gap is actually wider in Kentucky. A Harris poll from 2010 found that 58% of people with disabilities are either living paycheck to paycheck or going into debt, compared to only 34% of people without disabilities. And according to a 2012 FINRA Investor Education Foundation, and don't ask me what FINRA stands for because I didn't write it down, but only 10% of individuals with disabilities were certain they could come up with $2,000 in a financial emergency, compared to 36% of individuals with no disabilities. And of course, a person on Social Security SSI couldn't come up with the $2,000 anyway, but by law, but so far. Right. 53% of individuals with disabilities were certain they could, with disabilities, were certain they could come up with $2,000. That's actually reversed, I think. I messed that one up. No, they could not come up with the $2,000. Sorry.
You got it right.
53% of individuals with disabilities were certain they couldn't come up with $2,000 compared to 23%. And then that same study found that 44% of individuals with disabilities have unpaid medical bills, which I'll talk a little bit later on. I think we all know that people with disabilities have large medical expenses overall and get themselves in debt because of it. Again, why do individuals with disabilities need a financial identity? According to a 2013 national survey of FDIC, 7.7% of all American households were unbanked, compared to 18.4% of households headed by an individual with a disability. Now, this surprises me, and Carolyn's heard me go on the spiel before, because I grew up in the suburbs of Louisville in the 60s in a lower middle class background, I guess, and we didn't really do without much, and my parents both survived a depression and were pretty intent on me saving money at a young age. So I started a bank account when I was 12 years old, and then, you know, almost 20% of individuals with disabilities are unbanked. Kind of surprises me because of my background. I started with collecting bottles for deposit. Anybody in the room remember when you could collect bottles for deposit? And also delivering papers. So I started a bank account at age 12 at Citizens Fidelity Bank, and I brought my prop with me again today, Carol. I got a gift from starting a bank account that I know you are going to love. This is my gift 50 years ago for starting a bank account. I'll put it right up there so everybody can see it.
I got to put my UK cup over here just in case.
About 30 years ago, my wife had a friend over with some young kids, and this was sitting on the shelf, and they knocked it off the shelf into about 20 pieces, but I had to put it back together and so I could keep it. And I'm pretty sure those kids were UK fans. So. This same survey found that 25% of all households were underbanked. I'm not sure what the standard is for underbanked. I should have given you more information on that, compared to 28.1% of households headed by an individual with a disability. And finally, the survey that should be the survey found 32.8% of households headed by an individual with a disability use alternative financial services, compared to 22% of all households. Do we know what alternative financial services are?
Credit counseling?
No. Outside of traditional banking, what would you use instead of traditional banking? I think Carolyn would know. Payday lending, rent-to-own, pawn shops, money orders. All those non-traditional banking ways of handling your money are more expensive. So by the very nature of not being banked, your life can be more expensive. So who needs help with asset development and financial education more than people with disabilities? I think we've proved the point. I'm from Vocational Rehabilitation. Are you all familiar with Voc Rehab in the room? We help people, individuals, go to work. We've been involved in the last few years and increasingly with this whole issue of financial education and asset development, basically because we know that just by getting somebody a job, you don't break down the barriers for people to obtain an economic stability. They need more than just a job. So we've been trying to incorporate financial education in our services and then into our counseling, training staff, and engaging in various activities, so that once a person has a job, they also have the knowledge to maintain their employment and be on the path to financial self-sufficiency. So even nationally, vocational rehabilitation is looking beyond employment to assist its consumers in joining the economic mainstream. We started at Voc Rehab, we started with a summit in 2012 and have kind of branched off from there. So I'm going to talk about a few specific services, and the next one I'm going to plug a program of ours. It's a low interest program. Everybody familiar with the Kentucky Assistive Technology Loan Corporation at all? Wow, that's good. We established the KTLC. It was established by state statute in 1998. We made our first loan in 2000. And we've loaned more than we've loaned more than $9.5 million in the 17 years we've been loaning money. And we do try to reach people with no or poor credit to help them rebuild their credit, or by getting a loan and successfully repaying it, or if they have no credit, by developing a credit history. Although the statute itself is not restricted to individuals with low income, we can provide loans to millionaires. We have no restrictions on the statute. As for assistive technology, which is a very broad subject, we define very broadly most of our loans, and I think it's in a later slide. 60% of our loans are for hearing aids, for instance, because there is no funding source for hearing aids. So we make a lot of loans for hearing aids. And again, the second most thing is a vehicle or vehicle modification. But we have had a broad definition. We've actually loaned somebody the money to put a wood floor in their apartment, or I guess it was their house, because the ruts in the carpet were making it difficult to move by wheelchair. We loaned money for someone to put up a 6-foot fence because their spouse had Alzheimer's and they didn't want them wandering off. And I probably shouldn't say this, but we've even loaned for a swimming pool as a therapy device.
Hey,
so we don't want to spread that too much. And I'm happy to say they paid that off.
They paid it off. They paid it off.
Segway, we also loaned for Segway for a car salesman who was having trouble walking. So just to give you some background, KTLC is Kentucky's alternative financing program for assistive technology. There are 40 such programs in the country. And there are for individuals with disabilities who might have limited access to traditional loan programs because of low income, poor, or no credit history, large medical debt, which we see a lot of. And borrowing money and successfully repaying it, of course, is a way to rebuild bad credit or build credit, period. We've always been pretty active in our program. We are among the top 5 every year in the 40 AFPs around the country in terms of applications, loans, and the money we've loaned. We are a guaranteed loan program. We do not loan the money. KTLC is part of state government, but we guarantee loans at Fifth Third Bank, and they loan all over the state for us. Hardly ever at a branch. It's through email, telephone, and such, in the mail. Because the prime went up, our rate is now 5%. As I said, 60% of our loans are for hearing aids. We recently changed the rules. We can loan from $500 to $500,000. I mean, $500,000. No, we can't loan for $500,000.
People are listening, Dave.
Yeah, no $500,000. 50,000 for cars or vehicles or vehicle modifications. That's the only thing that goes above 25,000. And our home modifications are limited to 15,000. And one of the reasons we restrict that amount is that we guarantee with a fund we have in the bank, so we don't want to eat up the fund on large defaults. And I shouldn't say this either, but we also, Dan, we only repossess cars. We don't go to somebody's house and take their hearing aid out of their ear. So you know, some of these are risky loans. Now, any questions about KATLC before I move on to the, yes, ma'am.
How do they access like an application or?
We have one on our website, KATLC. Oh, okay. She asked, how can you access an application? The easiest way is through the website, katlc.ky.gov. It's on there. You download it and fill it out. We don't have an online application, but we accept the applications by fax and email attachments, but we don't have an online application. There's a KTLC part of the application, and there's a Fifth Third Bank part of the application. We have a 7-member board that approves the applications. Fifth Third gives us a brief summary of the person's credit history. Sometimes they'll make the loan on their own, but most of the time we have to decide to make the loan because they would not typically make it. We make a good number of loans with a credit score of 0, meaning the person has no history. And because that's one of the things we want to help them to do, develop history. And we've had credit scores up to 800 a couple times, which is very rare. The Earned Income Tax Credit, I think for people of low income, is a very important asset building tool. And you do have to have earned income to qualify. So individuals with disabilities who aren't earning any income would not necessarily qualify for this tax credit. But as an anti-poverty tool, it's very important. It's a refundable tax credit, first introduced in 1975 and expanded in 86, 90, 93, and 2001. Considered by many to be the largest anti-poverty tool in the United States. The EITC provides low-income individuals and their families with cash to pay off debts, start savings, or purchase an asset. And I love this quote because it proves that this particular issue, the particular tool, is bipartisan. Ronald Reagan once said, "The Earned Income Tax Credit is the best anti-poverty bill, the best pro-family measure, and the best job creation measure to come out of the Congress of the United States." And this last one is also important. You have to claim it to receive it. You have to file and claim the EITC to receive it. And the IRS estimates that 1 out of 5 people who qualify do not get it. So it's important to apply. I have to borrow. On your table, you have this. There's an illustration of the effect of the EITC on Kentucky. Kentucky, 400,000 people in Kentucky get the Earned Income Tax Credit. And Kentucky gets almost $1 billion back in the state to fuel the economy through the EITC every year. So that's pretty impressive. The average return is $2,400.
That's what the treasurer happy.
Yes. It's very happy.
Mm-hmm.
Okay, so our son has a job, but he doesn't make that much money, so he actually doesn't file.
He should.
He should.
He
Yeah.
should.
Yeah. He might
Absolutely
get
should.
a refund.
He might get a refund. Yes, he should file.
Okay.
I know somebody who filed this year who has 2 children and got the EITC. Their tax return was $9,000. Well, anyway, so folks can get free tax assistance. There are 200 free tax preparation sites around the state. If you live in Louisville, Lexington, or Northern Kentucky, you can find those sites out by dialing 211. And there's also a Community Action Kentucky number that will give you the sites. I think you all have this handout, but here are some of the VITA projects in the state. These are run by are connected with the Kentucky Coalition Against Domestic Violence, which has a very strong asset building program that we'll talk about later. So these cover most of the state, I think. And you can use that information if you want. I'm going to talk about benefits planning. Any more questions about the EITC? Yes, ma'am.
I'm sorry, I might have missed this, but what qualifies somebody to receive the credit?
From
What qualifies them? I mean, whatever.
from EITC?
Yeah.
It's low income, and I had this. I didn't bring it. I don't have a slide with that with me today. I should have brought that.
When in doubt, file.
Yeah.
Okay.
File. It'll be part of what you'll be worked through on any software program to see if you qualify. I'm sure at the VITA sites, they'll work through it. So people should file. If they got a W-2, they got a 1099, people should file.
I can send that to you if you, my email address is wrong on the program, but it's davis.matheis@ky.gov. If you email me, I can send you I got them somewhere. I'm sure they're easily to get, so I should include them. davis.matheis@ky.gov. On my last slide, I actually have it wrong, but so don't pay attention to the last slide.
I'm going to try that.
Well,
We have a question from online.
okay.
Does an individual have to have a documented disability in order to qualify for all of these services?
An EITC is for low-income individuals no matter what. It's just an economic qualification that maybe a person with a disability could also qualify because of their income, if they have earned income. But this particular one is for low-income individuals. KTLC, which I talked about earlier, is for individuals with disabilities or family members. So we get a lot of loans from parents who want to buy a van or buy a van so they can modify it. If it's for a person with disability, we would make the loan to them. Benefits planning in recent years has gotten a lot of focus from Social Security Administration. It really is designed to assist people who are Social Security recipients understand their benefits, understand the consequences of going to work, and Carolyn can add anything she wants. No. So benefits planning is done mostly, I hope, by certified individuals who've been through the training, which is available through Virginia and Commonwealth University across the country. We have a lot of, a few community work incentive coordinators in Kentucky. Let's see if I can think of any offhand. Got it. Oh, Carolyn Wheeler.
I'm that community partner person, though.
Yes, you're a community partner work incentive coordinator.
Counselor.
And Holly O'Mary. Hi, Holly. Holly's working with our CWIC in Louisville with our SGA project, which I'll talk about in a little bit. And we're trying to get Holly certified if we can get her into the training. Okay. One of the big resources for benefits planning is funded by the Social Security Administration. It's called the Work Incentives Planning and Assistance Program. There are two in the state of Kentucky. One with the Center for Accessible Living in Louisville, basically covers the western half of the state, and the other one's with Goodwill Industries of Kentucky and their Lexington office, which covers the eastern half of the state. Those are their phone numbers. They do have a priority on who they can serve. Do you want to explain that priority? Do you want me to? Yeah. They're supposed to serve people who are job ready or are already on the job. That's their first priority. If they serve those folks, don't have anybody else to serve, they can take referrals from the general public, people who want to get a benefits analysis. Is that a good enough explanation?
That's a good enough explanation.
My agency, a few years ago, when Social Security suspended the WIPAs, trying to decide what to do, we instituted a fee for service for benefits analysis. Currently, that fee is $450. So if you're a VOC rehab consumer who's a Social Security recipient, we can pay for a benefits analysis. And Carolyn has done a few of those. And so it allowed us to put a further emphasis on the whole idea of doing benefits planning for our consumers, which is now part of the law that governs vocational rehabilitation. The federal law that governs vocational rehabilitation, we are required to at least provide information on Social Security recipients' benefits and how they can get assistance. And we're also trying to provide the assistance itself. We found in when we instituted this benefits planning service fee, we did find that the people who got the analysis were more likely to stick with us and get employed than recipients who did not get the benefits analysis. And which our rehab rate is basically, it's a hard one to understand, but it's of the people who get services from us, how many of them went to work, and the rehab rate among recipients who got an analysis is 20 points higher than the recipients who did not receive an analysis. So it's something we continue to emphasize. I'm going to go through another VR project, which is the project I mentioned Holly is working on now. We're one of 2 states, along with the Minnesota, to participate in a research study funded by the Institute of Community Inclusion at UMass in Boston. For the last year or so, we've provided enhanced services to 500 individuals who are SSDI recipients only. We used a team approach involving a benefits planner, a certified benefits planner, a counselor, and a job placement provider, and we enhanced the pacing. One of the things, and I'm not sure how familiar everybody is with voc rehab, but one of the things you hear as a criticism of voc rehab is the process often takes too long to make a person eligible, to get a plan signed. It's kind of in general, an issue that people have found. So part of this project was trying to enhance the pace, because if you're a Social Security recipient, you're you're presumed to be eligible for VR services, so it shouldn't take too long to make an eligibility decision. And ICI and the federal government, because this is Rehab Services Administration money, was interested in knowing whether engaging a person early and keeping them engaged would help keep them involved in trying to find work. And so that was part of the study. If you grab onto them early and keep contact, nationwide, Social Security recipients, particularly SSDI recipients, they drop out of the program at a pretty high rate. And they were trying to lower that rate by seeing if enhanced pacing would help. We also provide financial education and benefits planning as part of the service model. We had enrolled all our participants by July last year. Our data that we've been seeing is pretty promising, because we had 500 people in the intervention group, and then 500 people just got services as usual, SSDI recipients. And what we found is that the individuals in the intervention group were more likely to have an individual plan for employment written, which is the document that generates all the services we provide for a person. So we were keeping people involved that long to have a plan written. They were more likely to be employed. And once employed, it looks like they're more likely to obtain wages at SGA level, which I failed to say what SGA level was. Right. Does everybody know what SGA stands for?
I doubt it.
I doubt it. Substantial gainful activity. If you reach substantial gainful activity, you go off the Social Security benefits, although it's more complicated than that. There's a period of time where you're still on, but Social Security's goal, of course, is to get as many people off benefits as possible. And we made it clear with the community work incentive coordinators we hired with the project, and Carolyn knows this too, you don't want to recommend full-time employment at SGA if it's to the detriment of the consumer. But if you can work with them to see that it is a benefit, then maybe they'll get off the Social Security. So that was the purpose of the project. And so far, the results look promising, and I wanted to include that because it looks like benefits planning is a tool that can end up with more people working and more people working themselves off